Want to know how you can gain access to capital to jumpstart your journey to entrepreneurial success? For entrepreneurs who are just starting out or those who have been in business for years, Minority Business Access is your podcast. Welcome to our show, where we will guide you in avoiding the pitfalls and thriving in your chosen business. Now, onto the show with your host, Solomon Ali.
Hey, how are you? It's really great to see you again.
Yeah, it's wonderful. It's good to get in touch again and catch up, right? Catch up on a few things.
All the time. You know, I was surprised to hear that you were in Charlotte. You know, Canada is a little ways from Charlotte, so you dropped by.
Yeah, well, with COVID up there and lockdown and everything, it's just, I had enough of lockdown, right? So I had to get out and rent a vehicle and start traveling, right? So,
okay, so it's just pleasure, fun?
Well, I like a little bit of pleasure, like a little bit of work, and that's for me is the best vacation for me ever. So I like to mix them all up. So when you're traveling and you're doing some business here and you're doing some pleasure there, that's how I like to travel.
So it's exciting.
Yeah.
Right now you're just taking downtime and you're just having fun.
Yeah.
Okay.
No one-way ticket.
One-way ticket.
Well,
so you don't know when you're going.
I don't know what I'm going by.
Well, great. Listen, what we're going to talk about today is you were asking me some questions.
Right.
And because you were asking me some questions, I figured a great idea would be to just throw it on a podcast.
Right.
Okay. So the same questions that you were asking, I can answer for the whole world that may have the same questions and concerns. So first, let me ask you to introduce yourself so that they know who you are, what it is that you do. And, you know, by the way, Dave has been on Minority Podcasts before, a couple of times at least. So, you know, you'll understand on his other podcast that we did that we talked about his business and everything of that nature, what his business was. But now Dave is asking questions about funding to scale his business and what we do and how we actually do it. So we're going to take the opportunity to actually share that, and Dave's decided to participate in that with all of his questions and concerns and allow that to be captured on the podcast so it can be shared with everyone. So everybody lean back, hold on, pay attention, don't miss anything. It's going to be a real fun ride today. Dave, please tell us about yourself and your business.
Yeah, so I'm from Ontario, Canada, and I was raised in agriculture. So my father started in the 80s buying up land. It was a hard time in the 80s. Land prices were low. Farmers were having a hard time, and that's when he started buying land, was during those times, because he understood that everything has cycles and everything changes. And so he started buying land then, and I was in agriculture. But, you know, having 5 older brothers and not knowing my purpose in life and what I was supposed to do, most of us dropped out in grade 10, right? So that was the routine, right? And from there, I didn't enjoy going to work every day. I really didn't. I mean, that's what you'd done, and you saved money and you put it away, and that was the only thing we were taught. So I guess through that process, I just pushed myself. I went to Mexico. I'd done a few different things that were just strange and different. And when I came back, not only did I have hunger, I had difficult experiences, and so that's where I started growing from that level of being basically broke, right, and starting up again. And so I never felt ever broke. I always felt like I had enough.
So it sounds like you had an experience at one point in your life like I did.
Yeah.
Where you lost everything, didn't have much to work with, was just broke and just trying to make ends meet and figure it out.
Right. So I done that. And so once I started learning a few different things, I said, well, I had an advantage that I didn't know anything. Okay. Because I didn't go through school to be, anything particular, right? And so, but that advantage is the fact that I had to go learn, right? The disadvantage I find sometimes is people feel like they know it, and they don't know it, right?
So when you say you have to go learn it, Dave, what are you talking about?
So I went to any programs like Tony Robbins, or I met up with Aaron Young. a friend of ours, and he taught me how to manage businesses and how to structure businesses and stuff like that.
So let me just cut in just for a moment. So you went and seeked out knowledge from experts who were able to share knowledge with you.
Right.
And you just didn't seek out knowledge from any old body.
No.
You got knowledge from people who are at the top of the game.
I paid the premium. I paid the price to get that. And I say it's not a big price. The reason I say it's not a big price is that if you spend $5,000 to go to a program with some of the elite people in the world, whatever you're going to get from school, that you're spending $10,000, $20,000, $30,000, $50,000, you're not getting that kind of information.
Right.
Their information they're giving to you has been put in a textbook, and by the time they get to you, it's been a little outdated. In today's day and age, you got to be quick.
Okay.
Right.
So let me ask this, because I did the same thing. Right. I'm only a high school graduate. Okay. I would like to think I was at least a smart high school graduate. But I have no education after that. Everything after that was self-taught.
Right.
But when we say self-taught, or when I say self-taught, I had to go to different places, like the Laughlin group, learn how to put a structure together to protect my family and things like that. So, and it was costly. Some of the different structures, like one of the structures back in the day that I used was the Rockefeller structure. And I spent thousands and thousands of dollars, and people, I don't mean I spent a few thousand, I spent like 20, 30,000 back then just to get that Rockefeller structure and everything to do what they said it would do. So I would not own anything, but there would be a level of control through various contracts and things like that. And I can't articulate it. The experts will have to do it. And that's what you're saying that you did. You went to the experts, the leading experts within the industry, to help you to do what you needed to do. And then you applied those different applications in your business life.
Right. And again, you understand that, I was taught to work hard, save my money, but I was never taught to make money, how to make money, right? And people say, well, it's not the same thing. No, it isn't the same thing, right? There's a difference between working hard and saving money. It's a very good foundation, right? But it's a very different thing to go make money.
Okay. And, I think we always taught that, right? Go get a job, go work for somebody, be just over broke. And doing that, you might have a good career or whatever, and then you can retire and get a gold watch and still be broke. As an entrepreneur, you take a lot of risk. Right. And how does that risk fare out with you? Has it been worth it thus far?
Yeah, and yeah, of course. And I would say, always follow the money. That's a slogan I always say, is follow the money, because there's two things. It's the cash that comes in, and it's the investments, right? My dad was good at teaching us to invest our money. He was good at that. But again, he wasn't taught us to make money. I don't blame him for that. That's what he knew, right?
Right. Okay.
And so, yeah, in this day and age, you got to go out there and seek and find, because again, things are changing very, very quickly. And if you don't have that hunger, you're gonna be left behind.
All right, so let's get to the meat and potatoes.
Yeah. So I guess if I were gonna ask you, is that, which I don't have this very clear. So as I understand, you create public companies.
Hey, you're gonna have to give me that energy, man.
No.
See, I'm feeding off your energy, and you got me all down here. I need that energy.
No.
Give me that energy.
No, I'm just wondering, the public companies. That's a business that you have been doing over the past, is going to people, helping them take their company that's successful, I imagine, right, and help them become public. Is that basically where you spend a lot of your time doing, or what is it?
Well, Dave, what I do, and first thing I would say is to everyone, look, you can go to SolomonRCAli.info, or you can look at, of course, if you're already looking at the podcast, MBA Minority Business Access, you're already there. What I do is this: I consult. That's the first phase of it. is that a potential person like you that's looking to grow your business, I consult with you. I look at your historical financials. And when I say I'm speaking of my team and I.
Why would I reach out to you in the first place? That's my question.
Because you need money to grow your business. And
but what if I don't need money to grow my business? What if I think that
then
my
don't
business
waste
is
your
fine?
time and don't waste mine. Okay, that's just being simple.
But there's a lot of people that say I need money to grow my business, but their business is actually a good business to grow. Right.
When you say a good business to grow, what are you talking about?
Well, there doesn't have good legs, it doesn't have good foundation, it doesn't have good potential, all that kind of stuff.
So you're saying basically, is it profitable or could it be profitable pretty quickly?
Right. Well, what I'm saying is that how do you know when as far as my business is concerned, it's actually quite successful, right?
Okay.
And so I'm starting to understand. So don't get me wrong, I'm starting to understand this. That I have a lot more energy and drive and vision than what I'm getting as far as money coming in, right? It's successful, but I want to blow it up, I want to go a lot faster and a lot harder than I am.
So let me ask this question,
Yeah.
because you started out, why would someone come to you?
Yeah, right.
All right. I don't take companies public, okay?
Okay.
What I do is I consult. I take historical numbers and I build a model. My team and I, we build a model. Now that team consists of various people in the law field, in the accounting field, and other consultants, and we look at the structure.
Mm-hmm.
Then we look at what's the possibility, what is it that you're doing this for, why would you want to do this? So once that piece is done, and then I reach out to my network, okay, of investors or banks and things of that nature, and I'll arrange the funding for your company, okay? And then you make the decision on whether or not that funding is acceptable. So basically, I am going to introduce you to a private equity company. I'm going to introduce you to a bank. I'm going to introduce you to different parties, because you might want debt financing and you may not want equity financing. You might want venture capital fund. And so I'm going to introduce you to various people that fit the model. And I'm going to come back to you after we've developed a model, and we're going to sit back and say, because maybe your model is that you're looking for an exit strategy. And I'm going to say, okay, we want to go to the capital markets is where you would want to go. And that strategy will be best fit with this particular person. Okay, the person being legal entity, and then you will have that conversation with them. I would have already given them your material and everything of that nature that we have put together, so that they know and understand, and it'll probably almost 100% of the time, almost 100%. Nothing's 100% guaranteed, but it will meet their qualifications, what they're looking for in a company to make an investment in.
Right. So let me give you my scenario, okay? And then you can feed off that, and I'll ask some questions based on it. So in my scenario, we have land, and we buy land that only has about a 3% return on investment on a good day. Okay? That's what land gives us in Canada.
3% return.
3%, that's it.
Okay.
Right? On a good day. And so what I've been doing in the past is having a business that has generates good cash flow, right? And I've been taking that money and I've been buying land with that cash flow, right? But I have the desire to build, we have one grain facility, which we take to buy in grain and resell it to the marketplace. And that's can be quite profitable. And I want to build another facility, and I want to buy more land and so forth, right? That's my end goal, right? That's what I want to do. I want to build the farms out. So the thing is that when this land that doesn't have a good return on investment, how do you, the investment can go up, right? And that's the good return on investment, but the cash flow side of the investment is quite low. So in a scenario like that, what are you suggesting, or what are you suggesting in a scenario like that? How would you help a person like me in a scenario like that, where I want to grow this business quite quickly, quite large, but it's capital intense?
Let me start off by sharing a story that we're all familiar with, right? Okay. Have you ever heard of a company called Amazon?
Yeah.
Okay. As Amazon, is a publicly traded company, right? And so one of the exciting things about Amazon is this. They lost money for 14 years. Do you think a private company could have lost money for that long and still be in business?
No.
So that's the first step, is understanding the difference between a private company and a public company. It's like my trainer tells me. He said, hey, your public game is iffy, but your private game is off the chart. And what that means is that you're constantly doing the work that's required. So when you show up for your public game, you're not going to always have a good game. But the majority of the times, it's going to be where it's supposed to because you put the work in.
And people are going to like the vision behind it. Is that the concept?
Well, that's what you're going to, as a public company, it's completely, everything's transparent. So
Right.
you're going to share your books and your records. They're going to see the things that you do well. They're going to see the things that you do bad.
Right.
They're going to see where you need improvement at. Okay.
Right.
So you got to be comfortable there. But back to my Amazon story, right? 14 years of losing money.
Mm-hmm.
And the CEO always said, what? Don't ask me. I don't know when we're going to make any money. I don't know if we're ever going to make any money. Okay. That's what he said.
Yeah.
Okay. And people continue to invest and buy his stock and things like that.
Story.
Because they believed in him. Yeah. They believed in his management team. They believed in his dream and his vision.
Right.
And that's the best way to articulate that.
So if you have what you're saying is if you have a bit of success in the past and you have clear vision and clear goals, and you can see that, you go look at those statements. You go look at the person. I guess my question is this: is it like as a banker? Because my dad always said the banker is about your year-end income tax, your personality, and there's a few things involved. Is that kind of the same way that you look at all that, or how does it work for you?
I think each individual transaction is different. And when I say transaction, I'm talking about deal, because every deal is looking for something different. In every industry, every business. You can have two businesses in the same industry, but require different things, okay? And so, a lot of what you're asking is determined throughout the due diligence. That's where the exposure of how the strategy comes together and what fits what your needs are. Because, see, your need might be, hey, let's say you might be as old as I am, right? And you're saying, okay, I want to retire. And I want to exit out. And I've been running this business for the last 10 or 15 years. And we've been okay. We haven't been greatly successful. We've had some years where we made money. We had some years where we lost money, okay? But now I want to exit out. And the chances of me finding a buyer for my business may be slim to none. And you know that, okay, I got a good management team, okay? So let me go ahead and do either a LBO, which would be a leveraged buyout, and let my management people buy the business so that they can keep it going. Or let me just take the company public and be a shareholder, one of the largest shareholders within the company that I founded, and rely on the board of directors and rely on a CEO that we hire to run the company and things of that nature. Now, I can go retire, go on vacations and things of that nature, and my net worth is in the stock now, okay? Yes. And that provides me some liquidity, okay?
So you just said about going public again, but you say you don't bring companies public, so what's the difference?
No. What I'm sharing is the difference between being public and being private. Okay. And that's why I use the Amazon story, because having access to capital really is what's important. That's the fuel of a business. Okay?
So what kind of company would be the type that would have a struggle to sell itself in the marketplace privately, but that would be good in public?
One is not working with Solomon R.C. Ali Corporation. Exposure. Exposing you to the market, okay? I'm not a market maker.
No, my question is this.
Let me finish, because I'm going to answer it all. I'm not a market maker. I'm not a broker-dealer. I'm not a promoter. What we do is consult. We get down to the weeds. We understand business from a different level.
Got it.
Most of it is from all the failures I've had. a lot of it, because I only had a handful of successes. But the handful of successes were tremendous.
Right.
But all the failures is where I learned everything.
Mm-hmm.
It's where I learned how to tie this knot. It's where I learned how to move out the way. I learned where all the minefields were. Okay, and it costs a lot of money. You know, people say, we were talking about education earlier, right?
Mm-hmm.
Education is expensive. However, ignorance is more expensive.
Of course.
So when you don't reach out to those who are proficient, who are experts in their field that can help guide you, okay, that's critical.
Mm-hmm.
That's why I use consultants.
Right.
That's why I use attorneys, accountants, marketing experts, and things of that nature. And one of the advantages that, let's say, a company like yours would get would be this. You get the Solomon R.C. Ali Corporation, that my team and I, and that network. So you get all of that knowledge, you get their networks, and so you get access to things that you wouldn't have access to. Okay, so let me give you an example. If I call up my attorney, I'm going to ask him a couple of questions that's pertaining to your business. And he's going to give me the answers to those questions. How much did that cost you? Nothing. Okay, because you got the knowledge,
right.
You had a concern and a question, and so you shared that with me, what your concern and question was. I went and had a conversation with my attorney and said, hey, I have a client that has this particular concerns and things of that nature. What do you think about it? He gives me the answer. And that's called leveraging.
Right.
Okay, so you're leveraging my relationship.
I get that. So my question would be at that point, so at what time do I feel like, hey, I'm bothering you? And at what point do I say, hey, you know what, this is a good situation for you? And I guess what the people, my question would be, but everybody's question would be in general, what do you get out of it at the end of the day on your side?
Well, here's what we do. We charge a fee for our consulting services. We charge a fee for arranging the capital and everything of that nature. And then once we introduce you to, let's say we introduce you to a private equity company. Now you and that private equity company work out your terms and your conditions on what you're looking for from the money. So they say, oh, I'm willing to give you $1 million. And here's the performance indicators and everything of that nature that we're going to need. Okay, and you agree and say, oh yeah, I can meet all of those things, and you agree to accept $1 million. Now, one private equity company may want debt in your company, okay, and you pay them back in time. Another private equity company or VC might want equity in your company. So they just want to be a shareholder and take the ride with you. And
are you a third party to this all? You still consult on both sides, or how does that work?
No, I never consult with the money. Okay, all I do is make the introduction.
Oh, you make the connections.
In other words, if I have I leverage my relationships that I already have, my existing relationship. So I'm gonna give you a true story.
Mm-hmm.
Years ago, I took a company to Wells Fargo, and we got almost a $300 and something million line. Okay, that's what I did. Well, I didn't do anything other than say, hey, this company, here's their package. I put the package and everything together, knowing what the bank would be wanting to look at, what they would want to see. And I went to my friend over at Wells Fargo, and I said, here's the package. What do you think? And he looked at it, and he said, hey, we'll take a look and make a phone call, introduce us. I introduced the parties and everything of that nature, and they turned around and were going to do business. Okay, that's what we did. Now, at the end of that particular deal, they didn't end up doing business because the CEO, and this is where CEOs get in trouble. Okay, this is very important. The CEO wasn't truthful on some of the information he provided. And if he would have shared that with me up front,
right,
then we would have been able to address.
So we would have done the deal. It would be just slightly different, or change it up a little bit.
Exactly.
Right.
So that we can have character and transparency all the way through.
And they weren't so transparent because they're ashamed of themselves, you think? Or are they ashamed of the deal, or ashamed of that little detail, or ashamed of what? Why do you think people don't do that?
Dave, I think they think that they're going to be rejected. And they feel like, hey, if I tell this, this is going to happen. Or it could be their ego, their ego, their pride.
Right.
I don't know, but I think most of it is, hey, they feel, hey, I've been to banks before. Nobody's telling me yes. So I'm going to omit this information, and I'm only going to share this, what I think is important. And see, when the moment they do that, they're not relying on their expert. Right. See, that's why we do the due diligence, so we can drill down, figure out exactly what is needed. And if you're truthful and honest, then we know how to address those things in a certain way and write the explanation to explain those things so the lender or the investors understand it. So, but when you don't share that information and you say, oh no, we never had a problem or this or that, and they find out, all credibility is shot. No one wants to do good. And that's one of the largest mistakes that businesses make when they're seeking capital. Them and their management team, that is one of the largest mistakes they make. And that's why it's so important to use a consultant, to use experts who are proficient in what they do.
Right. So, do you have an ideal client?
Oh, wow. Do I have an ideal client?
Yeah.
My ideal client is a person that is not going to lie, cheat, or steal, and just do the work. See, because that's kind of my macho. That's kind of my saying, okay, is that you don't have to lie, cheat, or steal, but you do have to do the work. And see, a lot of people want to do fake it until they make it. No, you can't do that in business. You got to do the work. You can't perpetrate, either you know it or you don't. And if you don't, then you need to find and surround yourself with the people who do. So I like working with those type of people. The second type, and this is all in one package, the second trait that I look for is a better way I should say it. The second trait I look for is this: character. Do I want to see that person be successful? Do I want to help that person become a multi-millionaire or fulfill their dreams and their obligations? Do I want to help them to do that? Now, if you're the kind of person, and I'm not saying you are, okay, but if you're the kind of person that's going to go spending your money on drugs and alcohol and various devices, stuff like that, well, I don't want to help you.
Right.
Okay, because that goes against the core of who I am and what I believe in. But if you're the kind of person that's going to help your family, your friends, your community, okay, your employees, your customers, you're going to solve a problem for mankind. You're going to make some type of contribution to society. That's the type of people I want to help. Those type of people deserve to be helped and take it there.
Okay, so you're not so subject to size of company, to profitability, to any of that kind of stuff. That's not a thing for you. Or what? That's really based on those few dynamics that you just talked about.
Well, those things play a part in it, but the first two things I just described are the most important to me, because if I don't feel that you're a good fit for me in that way, then I'm not a good fit for you. Okay. So what we like to do is we like to consult. We do our due diligence to see if it's a good fit. Okay. To see if there's anything there. We try to discover all of your hidden secrets and things of that nature and see if we can put the right package together. Okay. Then we like to see if it's a good fit. Okay. How do we merge this into what? Okay. Because maybe we need to merge it with a VC company. Maybe we need to merge it with an investment banking company that's going to bring capital and take you public. Maybe you're going to want to grow by acquisitions. We don't know until we do the due diligence, and that's where the consulting come in. Then we make the decision. So, but first, before I would even consult with you, I got to know that you have some character, you have some integrity, that I want to see and help you.
people like an ABC type thing, like here's this option, here's this option, here's this option. This is why I recommend this option. Is that generally speaking, is that what you do, or
Well,
or you say, hey, this I've thought all through, and this is the deal?
I don't particularly give people ABCs, but it's funny that you talked about ABCs, and here's why. In our consulting company, Solomon R.C. Ali Corporation, here's what we do. If you go to the website, solomonrcali.info, here's what you would find out. All right? We arrange capital. Okay? That means we bring people to meet you and you to meet them so you guys can work out some funding. All right? So that's the first thing. The second, we help to build wealth. So we have that network of investors and things of that nature, all right, that come from all walks of life. Most of the time, they're all accredited investors, okay? They own private equity companies, things like that. And so they determine whether or not they want to make that particular investment based on your vision. Because a lot of times, they follow me because they're like, oh, wait, we read a SEC report about Solomon when he was in a complaint, and the SEC was had these allegations that, oh, Solomon made the stock go up consistently 30,000%. That's huge. That's unheard of. Okay, so a lot of people found me that way, and they were like, oh, okay, and then they read the SEC report and they asked me about it. So that's what investors find. It's like, oh, wow, you help build wealth. And so a lot of people want to, so if I help your company, there'll be people who want to know about farming, and they'll say, oh, wow, I want to invest in farming. Because they'll say, oh, there's no more food, there's no more land, everybody's got to eat. So all of a sudden, a group of investors that follows me and might say, hey, let me invest some money over here and do this.
So I think a struggle that entrepreneurs have that have a strong vision, that have lots of goals, is that cash doesn't come in quick enough. And it sounds like an oxymoron because a lot of times people would say, well, and I would say, if you can't get the money from the bank, you don't deserve the money. Right?
I bet you the CEO of Amazon was saying the same thing
right.
for those 14 years. I need more money. But being a publicly traded company and having access to the marketplace, he was able to get the money that he needed to continue to stay in business for Amazon to become the company it is today.
Right.
You know, let's back up. You asked the question earlier. You got a successful business. What if you don't need the money? Okay. But you wanted to invest, all right, because you want to build wealth, all right, and you want to look at some of these different projects and things of that nature, like your business in farming. So John, who's been following Solomon R.C. Ali Corporation, may say, hey, I always wanted to be in farming, but I just want to invest. I don't want to do the work. I want to own some of the company. So I'm going to go buy, because you're a publicly traded company, and so he's going to go in and buy some of your stock and everything of that nature, and he's bought into your dream. So now you are sharing a dream, and you have found someone else out there in your community. And what I mean, your community is not your local community, but your community.
They believe in what you're doing and where you're going and all that kind of stuff.
Like mine.
Right.
So, and that community continues to grow and develop. And those are like your people. Those are your tribes.
Sure.
You know?
Right.
And it's like, that's where the excitement comes in, because it's like, oh, wow. They believe in you.
They want to go the journey with you.
Right.
Yeah.
And as you make money, they're making money.
They're rewarded for it.
And so that's what they do.
Because people want us. People don't. A lot of times don't want to. They prefer to invest in something they believe in. Right.
Exactly.
Yeah. So how are they going to find out? Because it's easy to hear about the Amazon story because now it's big and now it's working, right? And everybody knows about it now. How do the people know about Joe that's just starting up? Not really starting up, but starting up compared to Amazon where they are today. They're just starting up. They have the vision. They have the goal. They have a certain level of success in the past. And they are going public or whatever that transition is. How do they get to know about that?
Well, normally the first people, it's always word of mouth. It always starts with family and friends, because more than likely you're going to allow your family and friends to participate in your company in the early stages at a discount to what the retail market is or what it will become. And then later it's like, oh, you got a Solomon R.C. Ali, and all of a sudden all of these followers, they're like, hey, I like Solomon. I saw him do this deal. I saw him do that deal. And everybody's like, oh, I want to be involved in that. And so let me go. He was just talking to this guy, Dave, and he was working and doing the consulting work on that company. Let me see if that company's gone public. Let me go do some research. Because, see, again, our team does all the research and all the due diligence. We have two different types of due diligence. We do what's called industry due diligence, and then we do the financial due diligence on the company to make sure, oh, wow, this makes sense. Who are the competitors within the industry? How can you compete with them? Is there a particular niche that you can find in the industry? Okay, and if we show that in all our due diligence. And then on the financial side, we show, oh, okay, the company was profitable the last 3 years. The company's projected to grow over the next few years based on this. So we show all that in our due diligence. But that due diligence is really for us to provide back to you. Okay, and then you kind of share that with the world. But the people who read about Solomon, who know about Solomon, they sit back and say, hey, Dave, I want to invest in your company. And they call you to invest in your company.
Right. So, because I don't know this answer, that's why I'm not going to ask this question. But where are they finding this information? Is it to your website? Is it to how are the people in the loop?
Well, I'm glad you asked, because that's a very good question. They normally will go to solomonrcali.info. Okay. And they'll look and see what's going on. They may see, oh, wow, Solomon's working on a law firm. Okay. And then they'll say, wow, I always wanted to do something in the law industry and invest in that. But typically, law firms, you have to be an attorney to buy a law firm or to invest. So it's very closed, except for in 1 or 2 states. It's very closed. So someone might say, oh, I want to invest in agriculture. And they heard Solomon talking about agriculture, talking about he was working on a project or a deal, and they're looking at what I liked about it. So I'm able to articulate the things that I liked about it. Oh, I like that the price of land was this price. I like that their customer base was this. So then people are like, oh, well, if Solomon liked it, we should probably take a serious look at that. And that's typically how that goes. So basically, you're leveraging our network. You're leveraging our name.
Right.
Okay?
Right. And because you get out to the people that typically invest in you, and they're always, those type of people are always in the loop, is basically what happens. And they're smart because they've had a certain amount of success with you in the past, and they say, well, this, if something's working for you, just keep on
exactly.
Right.
Some of the people made 4,000% return. Okay. And, I don't have to brag about it. The SEC have a complaint out against me that said what? Hey, one of the things was, he made the stock go up 30,000%, but they never said it was BS or bogus.
Right.
The stock, and they told you what the numbers was. It went from 3 million to 300 million shares trading and stuff like that in the stock price. So that ain't Solomon saying that. Solomon didn't even know.
Right.
They brought that to my attention. Okay. Right. But, those are the things that people who know, oh, Solomon's character, Solomon's integrity. People who know that, oh, wait, Solomon believes you don't have to lie. You don't have to cheat. You don't have to steal. Okay. You have to do the work. So the people who know Solomon understand who Solomon is, they understand that. So even when they read a complaint or something of that nature, they're like, okay.
Right.
But we know the man.
Right.
Okay. And so then when I'm talking about being in the a particular industry, whether it's manufacturing or something of that nature, and I'm talking about what's about to happen in that industry, what I believe, because of course it's only my opinion, all right? What I believe, and then other people are like, oh, okay. And they are my tribe. They are my community. They're believing the same thing. And so we're walking together.
Right.
And then we invest together into your company because we want to be a part of your vision because we believe in your what? In your vision.
Right.
You know, another question that you had asked me, and I know you thought I wasn't going to get back to it. What if your company's losing money and is not making any money?
Right.
You know, is it a good fit to going public? Maybe. Maybe not. It depends on the management team.
Right.
It depends. If you here's how I will say it. If you're going public just to do one deal, it's probably not a good idea to go public.
Right.
But if you're going public because you need access to capital to do acquisitions and do multiple deals to grow your company and your business, now it's an excellent time to go public. And that doesn't matter if you're making money or if you're losing money. And again, I will redirect everyone back to where? The Amazon story.
Right.
Okay? Because Amazon was what? Losing money for 14 and a half years. The CEO had to keep coming out and saying what? Don't ask me. I don't know when we're going to make any money. We're losing money. I don't know. Okay. So he was brutally honest. He was transparent.
Right.
Okay?
People like that, right?
And so people love that.
Yeah.
Okay. And so that's what you have to be. So
Interesting.
if you're losing money, it doesn't mean you shouldn't go public. It all depends on what your strategy is. Are you planning to grow your business by acquisitions or organically? What does that look like? What does your performance look like? Okay. If you don't have that, okay, then you got to go back to a Salomon or CLE Corporation or McKinsey or something like that and have them put that together.
So what sets you apart from other people do this? I don't know, but just answer the question.
Well, you got the big boys out there, and the big boys look at particular companies that's doing a certain dollar revenue and doing a certain net, okay? The big boys charge you a tremendous amount of money as just a retainer, you know, and it's been a while since I've been around one of the big boys that do it, but the big boys would charge in the old days, in my day, $1 million upfront, non-refundable.
Wow.
To take your company public. Upfront, non-refundable. If the market conditions and everything was correct, they move it forward. If the market conditions they felt was wrong, they stop. You don't go public, that's it. You don't get your money back, okay? They keep your money now, okay? Because that, of course, was their due diligence and everything to put your model and everything.
It was a win-win for them no matter what.
Well, they would make more money getting you public.
Of course.
But they didn't lose some money. You lose some money, but they win.
Yeah.
And so that was the thing. So for us, we deal with all walks of life. You know, I like working with people who had to bootstrap it like me. I like to work with people who look like me. I like to work with people who have just that high school education and that's just going out there and just doing it, had to learn by trial and error, okay? Because I know they have something and I know the obstacles that they are faced and challenged with. I like working with women, okay? Especially minority women, women of color. Here's the reason why. They're the fastest growing in education. They're the fastest in starting their businesses and everything like that, right? But women have a tendency to do what in life? They dot the I's and they cross the T's.
Yeah.
They pay strict attention
100%.
to all the details.
Yeah.
So working with them is a joy. Normally when I work with people that look like me who are men, okay, whether they're black, white, or whatever, what do we come up with? A big idea, okay, a big idea, and then we leave the details sometimes to other people, or then we realize, oh, it won't work because we hadn't zeroed down on all the details and the mechanics of it.
Right.
And women tend to already hone into
100%.
all that. So
100%.
that would be the difference. So our companies that I like to work with, the sweet spot for us is what I call it, is companies doing $3.5 million and above, I try to cap it at about 20 million because I don't want to exhort the different people that I have to go to arrange the capital. Okay, so I know what the capital is looking for. I know what their sweet spot is. So in understanding what the capital is looking for, where their sweet spot is, that became my sweet spot. So now if I know the capital, this particular private equity company like to do 3 million, they like real estate. Okay, so I put your package together, my team and I, that makes sense for them. If it likes manufacturing and they do 1 million for manufacturing, I put your package together, my team and I, to design it for them. Okay,
but you don't always need capital. You don't always need capital.
Well, some companies don't always need capital. And again, the companies that don't always need capital, then they might just say, "Oh, Solomon, can you help consult us? Can you help provide an exit strategy for down the future? Can you help to show us a better way of possibly building a mousetrap?" Okay, and then we get in there, and again, we have to go back to one simple thing: some due diligence and investigating the books and the records and their industry. And normally, we end up knowing more about the industry than they do.
Right. So these people that there's got to be a lot of companies that should have went public that didn't, that should do other things that are not doing it. What do you say, or how do you reach out to those people and say, hey, you should probably look at plan B or C of going public or any of that kind of stuff? So again, going back to that kind of question that always, if it was, try to look for that one comment I'm always looking for, like, this is the thing that you should be doing, and if you're not doing it, you're missing out on things. Right? That's what I'm always wondering. What am I missing out on? Right. And so what kind of companies are missing out on things that you could or would have provided if they reached out to you?
I'm a firm believer when the student is ready, the teacher will appear. Okay, I don't go out, and we don't really go out looking or advertising for clients or things of that nature. Most of the time they come through word of mouth. Someone else has had a level of success with us, or they've heard about us and they call us up and have questions just like yourself and want to know more about the process. And they're trying to ascertain whether or not it's a good fit for them. Again, you keep focusing on going public. That's not what we do. We consult.
I keep it forward to going public because I need money to build stuff.
Well, if you need money to build stuff, going public may be the strategy. And one of our lenders may want you. See, it's what the lenders want. It's what the investors want. See, when you have a private company, let's understand, you can't get out of a private company unless you sell it.
Right.
All right. So the only ones who's willing to invest in a private company is a bank. And that's typically through a loan. Okay?
Right.
Because they know that you're going to put up all your assets and everything of that nature to get that loan.
Right.
Right. So if you came to me and and I was the bank, you say, "Oh, I have $1 million in assets." How much do you think I would loan you?
Usually 3 if it's good assets.
How much?
If I have $1 million of assets that's free and clear.
Yes.
Free and clear.
Free and clear.
If it's farmland, they'll offer me another 3 on top of it.
300,000.
Yeah, so there's 75%.
Okay.
25% of cash or of assets for free and clear.
All right. So that means they're not willing to take the what?
They're not taking risk.
They take no risk.
Oh, it's amazing. It's amazing business.
So,
awesome.
And that's how they make their money.
Of course.
Now, you come to an investor may say, well, I want a piece of the company, but because you're using my money, okay, I should get a bigger share, and now you guys have to negotiate. So the investor may say, and it depends if you got a straight startup, because a straight startup, if you come and say, I need $1 million, and all you got is a pipe dream, the investor's going to be like, look, well, we're going to take 65, 70%. Okay?
Right.
And you get the opportunity to go work it, have a salary and everything, and fulfill your dream, and hopefully it all works out.
Right.
If you go let's take a different scenario. If you're a business that's already established, that's making money, that's losing money in some years. Some years you make money, some years you lose money, right? And you say, oh, wow, I need $1 million. Well, the investor looks at it and says, oh, okay, well, yeah, there's some possibility here. It's like what you guys see on what? Shark Tank,
Yes.
right? Okay. And it's like what you see on Show Profit, right? Yeah. And now they can look at it and say, oh, okay, here's where I can invest and here's how much I can invest. Now, typically, a true investor is going to do pretty much what you said earlier. If it's $1 million asset, they're going to probably say, oh, I'll give you $250,000. I'll give you $300,000. Yeah. Because they know if they have to get rid of that asset, what are they going to do? They're going to have a quick fire sale. They're going to sell that $1 million asset for $500,000. They're going to still get their money back, and they're still making a profit. Yeah. Okay, and that's one of the key things that people, especially CEO entrepreneurs, have to understand. Okay. The investor is taking the risk because they're utilizing resources, money that has already been earned and made. The CEO and the business owner is asking for someone to buy into their dream, to their vision, something that may work, may not work. But when the investor buys into it, he's hoping like heck that it will work. Right. Because he don't want to come back in and take your assets and try to sell them off. Because then that means, yeah, he doubled his money in that situation, but he didn't share in the windfall if it would have worked, because he would have made thousands of percent versus just kind of doubling his money. Right. Okay. And that's the thing why most people don't get funded. That's why they don't get the capital they need. They don't understand what it is that they're asking of the investor, what it is they're asking of the private equity company. See, they'll come in and say, oh, I have $1 million in assets. And they'll say, hey, let me have $1 million. And the investor's like, dude, you're smoking something. Right. I can't give you $1 million on $1 million of assets, because if it fails, I'm going to have to sell these assets at half the price just to get rid of it. Right. So I'm going to take a $500,000 loss. And see, most people don't think like that. They're so caught into themselves of what they think the value is, and they're not thinking about a win-win scenario for everyone.
They can't go on the other side of the table and look at the deal from that perspective.
Exactly.
Yeah. So going back to the public thing, bringing a company public, you have to
stuck on that going.
Yeah. and the reason why I got to ask this question is because you say they have to have more nerve or more cojones or whatever you want to say, because they're gonna have to come up and have the vision, have the all that vision, the direction, and be able to sell it and also execute it. Correct?
Exposure and ego is what you're talking about. That's what when you say what you just said, what I'm hearing is exposure and ego. Being public, if you're wanting to take your company public, just to be the CEO of a public company, first thing you have to do is ask yourself, is this just all for exposure, and is this all to feed my ego?
Sure.
Now, if you find out, honestly, that no, I want to grow, I can grow my business from a $5 million company to a $20 million company over the next 36 months, 60 months, whatever that scenario is, and you believe that you can do it, one of the things that we do in our due diligence is we look at your management team and see what have they done in the past. Do they have the ability to do the acquisitions? Are they going to need help? Can we surround them with the right help? See, we're looking for your weakness in your armor. So we want you to be successful, because if you're successful, everybody makes money and you have a win-win. But if you're not successful, everyone loses money, including you. And then you will think it was the worst thing that you could have ever done.
Right. So when you're talking about a $6 million, $3 million, you're talking about gross profit per year?
Let's say revenue. So, and I'm looking up, and I don't know why, because I don't have to search for the answer. Typically, we want to see a company that have at least a 25% net, on their revenue. So now, that being said, we don't give a crap what the revenue amount is. It could be 3 million, it could be 5 million, it could be 20 million. All right, 25% net. Okay, so if it has that, now we know what we're working with. Now, it could be a company. All right.
Yep.
Now that would be one. Let me just be honest. I'm looking to the camera. That would be one I'm cherry picking. Okay, I'm gonna jump all over that deal and try to put that deal together quickly as possible because that's just going to be a tremendous upside.
You talk about the 20 million with 25% net. Is that what you're talking about?
Yes.
Yeah.
Okay. Any company, whether it's a $3 million company with a 25% net, we're jumping all over that.
Okay, that's
because that makes
that's
sense.
a good company.
Right. That's a good company. That means management knows what they're doing.
Right.
See, most people would think that it's just that net, right? No. Who got to the net? The management team. So they knew how to run the business. They knew what they were doing.
Right.
They knew how to cut their costs. They knew how to be efficient in their business. They understand their industry, right? So that's why that makes sense. But most people will hear me say that. Oh yeah, if you got a $3 million company or a $20 million company with a 25% net, they're thinking it's all about the money. No, it's about the management team. It's about the people.
And what you're looking at is being able to leverage that, basically, right? Taking that, leverage that to do whatever the success that individual is looking for, that company is looking for.
Well, here's what it's shown us. At that point, let's say you're a $5 million company. And you have a, let's use a 20% net.
Mm-hmm.
$5 million company and revenue with a 20% net means you're bringing in $1 million. That's pretty good, right?
Right.
Okay. So if you became a $10 million company, it will stand to reason that you will still bring in the same 20% net, which is $2 million. If you became a $50 million company, you're going to have a $10 million net. Because you already know how to run the business successfully.
Right.
Now, there may be some other factors that come in as you scale a company, okay? The cost of money and things of that nature, all right? So there's always other factors, but you know how to run the business.
Right.
And that's very different than a management team that does not know how to run the business.
Right.
You know, one would say, and I'm not saying this, so I don't want anybody to take this the wrong way. One would say Amazon didn't know how to run the business because they lost money for 14 years. Okay? Now, I haven't seen too many people that look like me that bootstrapped a company together that had 14 years to be able to fail and get access to money, get access to capital. That's why I do what I do. Because the people who are looking for access to capital and had to bootstrap it together, right? Who didn't go to the Harvards and to the Yale, who doesn't have a network and can't call on some of their college buddies who are in great positions and say, hey, who do you know who can help me? Because that's how all this works.
Got it.
See, now you get to call on Solomon Ali.
That's what helped you, right? There's people in your life that helped you at the beginning, right?
No, I learned hard knocks. I came out, I went in the military, came home, couldn't find a job, and had to go do something that I didn't like doing when I was in high school after football practice and track practice. I had to go clean up my parents' rental properties and things of that nature and get them ready for a tenant to move in.
Yes.
And all the other kids got to go play or put their feet up and play their video games or whatever it was, or hang out at the mall with their girlfriend. I had to go and clean up after some people.
But there was a couple individuals that I remember you mentioning afterwards that you really respected because they believed in you, right? And is that kind of the same philosophy that you're using here at this point in time? That, hey, if you bring your information, if I can read you, if I understand your character, understand your business, all that kind of stuff, I can be also that guy that can also find the contacts and the connections to help you get to the next level.
And what you're talking about, because it sounds like you heard a couple of my stories, okay? What you're talking about is in my early days when I started that first maintenance company, I didn't know what accounts receivables were. I knew nothing really about business. All I knew was how to go do the work. Okay, and I had people, and I learned how to manage people because I had come out the military as a sergeant. So I was managing people. I had people up under me. So I put together, what my parents taught me after football practice and track practice. Hey, go do this work. And then I hired some people, so I knew how to manage them because that's what I learned in the military.
Right.
And so then when I had a financial problem, see, I was looking for a Solomon RCI corporation, all right? So when I had a financial problem and I needed to make payroll in 5 days or whatever, well, back then it was 5 days because I called the people on a Monday and payroll was on a Friday. So in that case, we were like, wow, what is accounts receivables? I hadn't a clue. What I knew how to do was go in and paint, fix the walls, clean the carpets and everything of that nature. And I knew how to manage the people who were doing all that work for me.
Right.
Okay. But I had to go find someone who could help me because I had a payroll company.
Right.
All right. It was $100,000 and something payroll. Okay. And so I got on my knees. I prayed. I'm going to speed the story up. And after praying, I called the people on a Sunday, left a message. Someone called me back first thing Monday morning. I told the guy, hey, okay, look, I can't have time for you to jerk me around. I need to find this money, okay, because I got people to pay. And he said, look, do you have a moment? Let me go through what we do and how we do it. And he asked, do you have any accounts receivables? And I told the guy, no, I don't have any accounts receivables. And he asked me, do you know what accounts receivables are? And I said, no. Okay, so I had to be humble and understand and be honest. Right. See, this is why I tell CEOs and everybody, you got to be honest. Right. You don't have to lie, cheat, or steal because people will help you when you're honest and you truly want the help. Right. And so he told me what it was. He said, if you can get down here, I may be able to help you. So I had to drive from San Bernardino, California to Orange County. And then going there, he helped me. He looked at everything, took about 2 hours, 2.5 hours. He looked at all the paperwork and everything like that. He gave me a check for $186,000. My accounts receivables were like $305,000. All right. And so everybody understand accounts receivable. So you're not like me, like I was when I was 21, 22. Accounts receivables are work that has been done and completed, and the people have signed off on it, and you're just waiting to be paid. Okay.
Essentially, they have the invoice. So you got to send you the check.
They just have to send the check. Okay. And so that's what accounts receivables were, and that was my first experience, and that's how I made my payroll. Okay. Because everybody understands this. When you're in business, especially doing business to business, you provide all the equipment, you provide all the inventory, you provide all the labor.
Of course.
Okay. So the company gets a 30-day float if they pay you in 30 days or 45. So that's what
and sometimes they get a little late, and then you have to pay and charge them a little extra, but they give you 60 days, 90 days.
Okay. So then the next company that helped me was Laughlin. Okay. And it's putting my structure together. Okay. So that I wouldn't bring the pain home. And then I found out within that structure, what financing looked like. Because now all of a sudden I had these multiple entities that fell up under a trust or this or that. And I learned, like a lot of people you will hear say this, I made 6 figures. And I'm like, oh, wow, you paid a lot in taxes. Okay. So they get excited about that. Right. And I'm telling people, it's not about how much you make. It's about what you do with what you make. See, I'd rather make $30,000 a year and pay less in taxes, but control $1 million. So you understand what I'm saying? I'm controlling $1 million, but only made at $30,000. So in other words, if I had made the 6 figures, what's the tax on 6 figures? Roughly about what?
35%. Yes, 35. Yeah.
All right, so that's $35,000. Yeah. So they're bragging about they made 6 figures, but they paid Uncle Sam taxes for $35,000. They only took home $65,000.
Right.
Well, I only made $30,000, but I controlled $1 million. Which person you want to be?
When you say
That's
control,
what we teach.
When you say control, what do you mean by that? Because my corporate businesses pay quite a bit in taxes. You can't really get away from that, can you?
Well, legally you can. The objective is to pay your fair share in taxes. Not any tax avoidance or anything like that, but to pay your fair share in taxes. And how you do that is being structured and set up properly. That's why we have tax attorneys, okay? Right. So, one of the things President Trump said, oh, he's a genius because he don't pay a whole lot of taxes. But he forgot to tell everybody. He had some experts that knew. Right. He didn't read all those tax books. No. His experts read those tax books and found those loopholes. And, people tease and say, well, he's not a billionaire. Who cares? Here's the thing. He controls what? A lot. And that's the key. Right. It's how much you control. Right. What are you passing on to your family? What's your legacy? Are you going to be the guy that's an entrepreneur and you're going to work and work and work and then drop dead? Are you going to work and work?
Eventually drop dead anyways, but yeah.
Well, here's the thing. You can drop dead, right? We're all going to drop dead because we came into this world dying. All right, so we all going to do that, But if you stay fit and healthy,
you last a little longer.
You're gonna live a little longer, right? And you're gonna get to enjoy it. But here's what I'm saying: what's your exit strategy? Right. Are you going to do all this work and never get to enjoy it? Because if you're in a private company, only way you get to enjoy it is you got to sell it to someone, or you got to bring a partner in to buy you out of it.
Or you got to make a lot of revenue, net revenue, which is difficult.
Yeah, but then if you get sick, what happens to your business? 95% of the private businesses, even that are extremely successful, end up failing when the business owner goes through a failed marriage, a medical situation.
Well, I got to the failed marriage already, so I'm actually succeeding now. I'm doing well. I got through one.
So you got through one, okay? But you have to start over or something. Yeah. So when you start over, okay, how much ground have you lost?
Oh, a lot.
Where if you could have had everything set up in place, and that's what Solomon R.C. Ali does. That's what the corporation does. That's what my team and I do. We structure it. So that, you avoid those minefields. You avoid those pitfalls.
Makes sense.
So we don't take companies public. We arrange the funding and the capital. You go and sit back and say, hey, I like this, I don't like this, I like these terms, I don't. Now, that's between you and the lender. Now, a lot of times the lender is not going to be flexible, because they don't have to be, okay? Because they understand the value of their money. What they're bringing to you is worth, let's say if it's $1 million, it's worth $1 million, right? What you're bringing is a hope and a dream. Right. I'm gonna pick on this complaint, right? This complaint that the SEC said. They said, well, Solomon, you failed to disclose. Okay, that's wrong. Okay, I didn't fail to disclose. I had no obligation to disclose legally. By state law, by federal law, none, because I didn't own and wasn't a part of stuff, right? Well, they felt like I did, because they felt like because you started something years ago, you were supposed to talk about it. How crazy is that? It's a regulatory issue that makes no sense. Why am I talking about a job I had years ago? Why am I talking about a company I had years ago? I'm not. That's crazy. Then when it's set up structured properly, we had the best trust attorneys set our stuff up and give us a structure. Right? The best, and help write it for the state and for the government. Right? And all they did was gloss over it. Now, here's what I'm talking about. When you're looking at what's going on in your life, you want to make sure your legal structure is correct. It's not about how much money you make. It's about not bringing the pain home. It's about making proper investments so that you can make an investment in the company and that it goes to your family, it goes to the friends, it goes to the charities and the things of that nature you want it to go to. Okay? That's what you're supposed to be doing. You're supposed to be looking at what's your exit strategy. So that when that day come that you can't work, like I'm at an age now where I gotta go take care of my parents, right? So in going to take care of my parents, that means I got to remove myself somewhat.
Right.
Okay? And that means my thinking might not be always right on because I may not be focused because I have to take care of them. But when you have a public company, you're surrounded by a good, solid management team that can drive your business forward even in your absence. So you can't do that with a private company.
So can you get a good management team because you have the connections to people that know how to put management teams together?
Dave, I'm glad you asked. Okay, that's an excellent question. The reason you can get a good management team is because you can give them stock incentives. You can give them bonuses. You can give them profit sharing in the company so that they can participate in the success of the business.
So I have a good question here now.
Okay, all of them be good.
So the question I have is that, and you'd never recommend starting a business from scratch.
No.
Right. But
the reason,
I get it.
Please, everybody understand. The reason I don't recommend starting businesses from scratch, that's where I had most of my failures. Starting a business from scratch makes no economic or business sense. Find a business that you can buy. You can go to the bank, put down 10, 20, 30, 40%, let the bank finance the rest. The business itself you're looking to buy should be able to service the debt that you're taking on, okay, and it will help you to qualify. Point blank. Now, whatever my dream is, I may want to implement these microphones into that business as a new product line. So now I have my infrastructure and everything and all set up.
But a lot of businesses actually don't like their infrastructure.
You don't like it, then go buy it and change it. It's cheaper. The cost that you will spend starting a business from scratch is typically 2.5 times than just buying a business. It's 2.5 times. So if that business is going to cost you $500,000, you're going to spend about $1.5 million trying to figure it out, starting from scratch. Where you can just go buy that business and be done with it.
Okay. So then,
plus your return on investment is higher.
Right, everything's quicker. Okay. So let me say I have this manufacturing company, and I'm not. My strength is not engineering. It's obviously marketing and sales and that kind of stuff. If I wanted to do something with that engineering team and have them part of the return on investment, because I think it's really important that team, because it's really the people that come up with the new designs and all that kind of stuff. Is there a way of doing it through what you're just talking about where they're motivated somehow?
Oh, absolutely.
Yeah.
Yeah, that's profit sharing.
But that doesn't stop, it's making a little off topic, but that doesn't stop you from hiring and firing certain individuals in the organization?
Not at all.
Okay, that money stays in that division of the organization.
Yes.
Okay.
Not at all.
Right. And
the exciting thing about it is
that only happens when a company goes public, or you can do that ahead of time?
Well, you can do it ahead of time, but most employees won't find any value in it.
Got it.
Because it's a privately held company,
it's not,
so it's not trading. There's no liquidity. There's no market for your stock, so it's of no value to them. It's wallpaper.
Right. So it can be something that's pretty sound by the time it goes public, and it can be well aware of it and stuff. So,
right.
Yeah. That's cool. So I think in this process, as we go along, we may have to do this 1 or 2 more times. As I get on the journey, I'll get along this journey, I'll probably have a whole bunch of more questions.
Well, let me ask you some questions. Why do you need capital?
So why do I need capital? I have goals in the agriculture community that's bigger than my pocketbook. And so first when I started, my first farm was actually by borrowing enough money from my brother for the 25% down. That's how I bought my first farm.
Okay.
So I had no money the first farm. When I came back, started over again. So now I'm in a situation with my brother that had pretty deep pockets. He's on a different journey in life.
But why do you?
Exactly.
Why do you
So I have these visions and goals that I have that he does no longer wants to be part of, my brother. And he has pretty deep pockets. And I'm always pushing myself, right? Next thing. And the things that I want to invest in, like farmland, like grain facilities for buying and selling grain, those areas, they're capital intense projects.
Okay, so is these things that you want to invest in for the business or for your personal?
Well, if it were quote unquote public and I had a certain percentage of that public company, I would just keep it in the public unless you told me something different. Because I have a certain percentage and I'm okay with that. I'm good with that percentage personally. I'm good either way as long as I know that I always say all boats float together, right? As long as I know I'm rising with the tide, I'm happy, right? So that's how I look at it. I wouldn't care either way personally. I just have these visions, I have these goals that I want to hit. I know there's opportunity out there. And
so let me see if I understand you correctly, Dave. You want capital, okay, and you believe being public will help you to get capital.
Yes.
But you want the capital, I understand, to grow your business.
Well, my one business is cash flow rich, and the expansion is more difficult because it's based on cities and locations, right?
Okay, so we're talking the logistics.
Logistics is more intense logistically. And can it grow? Yes, but its capability of growing that part of the division will be slower, and so that's why I'm going more to retail and so forth.
Okay.
It still has the capacity of,
So what do you need the money for?
Because I want to go buy the land.
You want to go buy?
I want to buy land. I want to own a lot of land. I want to own elevators, grain elevators. I'm huge in agricultural service. So if you're a farmer, I'll look after fertilizer for you. I'll look after buying your grain. I'll do all that kind of stuff. The land is still, I really believe, is a strong portion of just an investment side. Again, it's the cash flow and investment side.
What you're telling me is you need capital to grow your business. Yes or no? Okay.
Yes.
So you need capital to grow your business. Yes. All right. Why not go to a bank or a private equity company?
Why not go to the bank or private equity? Because I'm getting maxed out.
Okay.
Yes, because as I explained, I think at the beginning, it was that if I buy a piece of property, it's going to have a 2 to 3% return on investment.
Okay.
Right, and so it doesn't take too long to the point that you might have a good investment. Okay, you might have good investments, but the cash return on these investments are not big enough to float the loans.
So it can't service the debt.
Right.
Okay.
Even though they're good investments, they're not servicing the debt.
I understand that.
Right.
So that's why you don't go to a bank. Well, what about taking on just private investors, things of that?
Because they'll take enough money that they'll wipe out the cash, the profit.
They'll eat up all your profits.
All the profit done. Yes.
So you've just answered your own question. That is the reason you come to a Solomon R.C. Ali Corporation, is for us to do the due diligence,
right.
Put a model together, right. And then help arrange capital for you,
right.
Okay? And because we have following, people who follow us, who are looking to build personal wealth, things of that nature, they invest into companies like yours and sharing the vision and the up, right. As you have said, all boats rise together. Okay,
right.
So I think that's how you say it.
Yeah,
right?
All ships ride together.
Oh, so that way everyone wins.
Right.
Okay.
Right.
And that you get to leverage our network.
Right.
You get to leverage our experience. Right. You get to leverage our talent.
Right. Because this land might not make much money in the next few years, but if it's worth $6,000-7,000 today, and if it's worth $12,000, 10 years from now, that's where the profits make.
Oh,
right?
Yes. Oh, no. Trust me. I understand multiple different industries. And so what I would say, okay, and I'm saying this totally without seeing anything, totally without doing any due diligence or research on what it is that you're looking for. I would sit back and say, okay, we will put a package together. I would introduce you to a private equity company. That private equity company will make an investment. You guys would agree on your terms and everything. More than likely, it's going to be the terms of the private equity company, and they're going to probably bring you maybe two. One may say, hey, we're going to want 60% of your company, okay? One may say, okay, we're going to want 25% of your company, but we're going to provide you with a line of credit. Okay, and so they're going to give you, in both scenarios, they're going to give you what's called, Lord, it's escaped me, but I'm going to call it right now performance indicators. Oh, it's financial covenants. Both of them are going to give you financial covenants that you must be keeping with, and milestones and things of that nature. Okay, that's how it works.
But aren't they? This is my question. This is where I kind of do the whole circle. Aren't they more of a shark than the public, as a public company?
Are they more sharks as a public company?
Than a public company. Now, the reason why I'm asking this question.
I don't understand the question.
Yeah, so is Shark Tank as reference, or Dragon's Den in Canada? They want a return on their investment quite quickly in general sense, right? But the business that I'm talking about, right? The business that has good return on investment, good cash flow, I don't need help with it.
Well, I'm glad you asked that.
Yeah.
Now I understand. Yes, the investors want to share in your vision, but they also want the freedom to be able to exit out of your deal when they need to.
Mm-hmm.
It's not a time limit. It's not like somebody saying, oh, I'm getting out tomorrow. They just want the freedom to be able to exit when they want to. And that, again, is the difference between a private company. If they invest in a private company, they cannot exit when they need to or wish. In a public company, they would be able to exit out.
Okay, that's what I'm trying to understand. So we're talking the same thing. I just was my understanding was that they had a flexibility. And that's what I like, is that they have a flexibility of exiting and entering as they please.
And the neat thing, if it's equity money, it's nothing to repay back. You're just giving up you may be giving up ownership. It could be large, it could be small, but you're giving up ownership. If it's debt money, okay, you're not giving up any ownership. What you're giving up is you're dragging your books down because you have this big liability showing and weighing on your financial statements, okay, until you pay it off. So, of course, you have to pay it off with the cash flow and things of that nature. Or you may have to bring in some more equity money to pay off that debt.
So one of the questions there is how do we, or how do I, as a person that is interested in what your services and that kind of stuff, how do we get in touch with you? How do we find you out? How do we get to know about you?
Send us a smoke signal. You will reach us at SolomonRCLE.info. Again, that's SolomonRCLE.info. The other thing you can do is go to our podcast and kind of look at that and get yourself familiar with some of the things we do at Minority Business Access. And we also have a book, I have a book coming out in late 2021.
Oh, cool. Good for you.
Yeah, it's going to be, it's a must read, man.
All right.
It's a must read.
So you putting that one together?
Yes. Yes, we're going to put a book out to kind of help people to go through all the minefields so that they can make decisions a little faster and know exactly what decisions they need to make and understand why.
That's good. So what percentage of your customers come from word of mouth versus other social
I don't know. I have no clue. When I say I'm so far removed from all that, the people do what they do, and I do what I do, and that's trying to figure out, hey, do we want to help this particular person?
Right.
And here's the reasons why. Now, the question is this: can we help? Yes, we can help. We got to like the people, though, and the people got to like us. It's got to be a good fit.
You've reached the end of another episode of the Minority Business Access Podcast. Connect with us at SolomonRCLE.info to leave a review and access more resources. We hope you enjoyed this show and found great value. See you at the next episode.